Hello, everyone. I'm Hernan Mayol, and I am the chairman of ITFA Americas Region Committee. And we're having a discussion about our fintech initiatives and updates. And this is a rare occasion. We wanted to do it live and interactive because it's rare that we have Andre available. He's all over the world trying to help people and our industry. And before we go to Andre, I wanted to share with you a couple of things. First, ITFA in the Americas, as we know, is every month we're having activities. We just had an event here in Miami. We're going to have a women's event in a couple of weeks. Then we're going to Brazil and Mexico, and then back to Miami for our conference, which is going to be held here at the Hyatt in Coral Gables on the 24th of May. So mark your calendars and register early just in case, okay, for everybody. And then if anybody wants to sponsor or has any questions about that, please let us know as well, as those spaces are limited as well. Okay, so today, Andre and I, this was my suggested agenda. So we're going to talk a little bit about the FinTech Committee and how it came to be, the evolution of the membership, and when Andre started with this initiative, the digitization initiatives that we have, secondary market initiatives, the regulatory work with governments to change laws that impede trade progress, collaborations and partnerships, and then obviously Andre had reminded me of some of the recent failures around DLT, and we'll probably address that and how that impacts the entire market. So without further ado, Mr. Andre Casterman, welcome.
Thank you, Hernan. Great to be here.
Thank you. So tell us about the committee, how it all started. I remember, many years ago, we didn't have FinTech. So yeah, I'm sure it was a technology committee, but how did that initiative started, and where are we from that date?
Yeah, basically, I started the FinTech Committee in 2017. I designed it mid-2017, and my goal at that time was to demonstrate to the financial institutions, the core membership of ITFA, that most of those fintechs were here to help them. To help themselves, of course. They are businesses, but help work in collaboration with financial institutions and counterparties, stakeholders in the industry. So that is why initially I set up the FinTech Committee, and gradually we attracted indeed, I remember by early 2019, more than a year after setting up, early 2018, we had about 20 members, technology companies, and we had developed a guide to describe how they want to work with financial institutions and what their value propositions were. And then gradually we created initiatives which we can cover in a few minutes as you wish.
Yeah, and I see obviously the evolution in terms of membership. How many members do we have on that committee?
Now we have close to 70 members that basically, usually indeed, they are pure technology companies. And the way I define a technology company, meaning they are selling technology per se. They are not platforms providing liquidity to SME lenders. And that was the first wave, pure technology companies. But then in the FinTech Committee, because of the initiatives we set up and that we can talk about, of course, we started attracting technology companies that were not starting to sell technology, but starting to extend liquidity to SMEs, like typically supply chain finance, invoice financing platforms. And then also in the committee, we attracted, because of the initiatives we initiated, we attracted institutional investors that want to work with banks and supply chain finance platforms in order to fund the origination activities of those financial institutions and platforms. But we can talk about all this in more details. I just tried to give the highlight at this stage.
No, phenomenal. And I remember getting involved initially as your liaison here for the Americas to make sure that the people that are headquartered in other places that are not in the Americas, to make sure that we connect with those people that had employees or initiatives. And then obviously we started having our own fintech members here to connect with them and making sure that they feel the love and that they participate in our activities as well. So it's been a fun ride there too. So tell us about some of these initiatives. So we talked about the basic, turning paper into digital, right? Digitization processes. How's that going for us?
So basically, yes, as part of those technology companies, we had like 40 companies at the end of 2019 in the FinTech Committee. I mean, so it had grown from 20 to 40 in about 16, 18 months. And I thought the goal is not to market them individually, because ITFA is not the marketing arm of those fintechs. They can do that by themselves and work with many commercial companies in the world to market their products. So how can we, ITFA, as an association, and building on my background with Swift, I spent 25 years at Swift, working on collaborative innovations as an employee of Swift. I thought, what can we do as an association with no commercial objective, because ITFA is a non-for-profit organization? How can we help? And the approach I took was to set up two initiatives, one on the origination side, one on the distribution side, to make sure that some of those technologies could be related to market trends and could engage the market, because they need additional stakeholders to be involved. Typically, I set up the Digital Negotiable Instrument Initiative that is all about adding a small piece of technology within existing trade finance processes to digitize bills of exchange, promissory notes, bills of lading, warehouse receipts, and so on. So that's on the origination front, the D&I initiative. And we're working with a core technology provider that focuses on this. But that provider in isolation will not do much. It has to be embedded into existing processes supported by banks and alternative lenders. And then on the distribution front, I set up the TFD initiative, because one of our members really focused on repackaging, securitization as a service. And the whole purpose of ITFA is to make sure on that initiative at least, is to demonstrate that trade finance is becoming a more accessible and more investable asset class for capital market firms. It has been in one or two ways, but it hasn't been done at scale. And that is what we're achieving on the TFD initiative. So both initiatives are aiming to ensure collaboration between different stakeholders. Sometimes tech companies work together, sometimes originators and the distribution platform work together, but it's all about making sure we align the mindset of those who are interested in working on those topics, and we are creating two basically communities of like-minded people, one on the origination side and one on the distribution side. And there's more to tell about it, but we can tell in a few minutes as you.
Yeah, no, absolutely. So that's great. So you call it DNI and TFD. Those are the two initiatives, okay?
Yes.
And origination, I didn't know it was origination. I thought it was digitization, but I guess it's the same concept. So included. So you want to clarify first the DNI initiatives. How does it work? How do people interact, and how does it apply to all of us as members here?
So on the DNI initiative, but in particular, we have the United Nations through UNCITRAL, the Center for International Trade Law. They released the model law for transferable records, electronic transferable records, back in 2017. And this is all about the UN trying to help jurisdictions around the world upgrade their national laws to enable the digitization of title documents, like bills of lading, warehouse receipts, bills of exchange, promissory notes, and a few others. Now, of course, this is the policy angle, and that was done really in isolation of the technology world, and they've done great work. And Singapore has adopted it, Bahrain has adopted it, Abu Dhabi has adopted it, UK is doing this. I'll share more details on that. But then what about the technology track? Because the goal is to digitize transferable records, those negotiable instruments. And this is where one of our members called Enijo out of Sweden said, we have the technology for making digital and interoperable. So we are not a platform, we are a piece of technology that you embed into trade finance and receivables financing processes or logistics processes for bills of lading. And as you, of course, understand from this is that this piece of technology in isolation will not do the trick. To really digitize trade finance processes and title documents as part of this D&I initiative, we need collaboration between the large trade vendors like Finastra, Surecomp, China Systems, and potentially others in the future. But those three I mentioned because they have embedded this Enijo technology to digitize negotiable instruments. And they own, of course, those vendors own the trade process. Could be receivables financing, guarantees, or other processes. And now we're working with some corporate platforms to do the same. So we have banking vendors and corporate vendors ready to digitize those negotiable instruments. The most interesting part in terms of what ITFA can do as the glue between all those stakeholders as an association and trying to find a win-win in the industry is basically to make sure that we also engage with the lawmakers, with working with the large banks at national level and with banking associations at national level, such as BAFT in US, ICC UK in the UK, or ADGM in Abu Dhabi. We are and the large banks in those countries, of course, we are engaging with regulators to upgrade the laws. And indeed, some of the people in our industry are taking these challenges on their shoulders to engage with the regulators and get the laws being changed. We are in the UK, and of course, English common law is a major legal system in international trade. We are 80% done. Thanks to the work we started in 2019, we are 80% done now. You can watch online debates in the UK Parliament around the alignment of the English common law with MLETR. And we hope to get good news by June. And the final release of the new Electronic Trade Document Act later this year. That's an example of a very important policy development. And with the D&I initiative, we combine policy work with technology work so that banks basically can get prepared for digitizing those negotiable instruments as and when they wish to get started.
Excellent. And funny, so you mentioned SWIFT and the equation, right? So I remember, so I did some consulting work with China Systems in trying to upgrade the codes for the US, for some of the US counterparts, the codes to make sure that they received and get all the SWIFT codes related to documentation, information. Yep. So how does that, explain to me, maybe for people that don't know, how does that play into the real world infrastructure with SWIFT when you're trying to negotiate instruments? So the idea is to not only embed the information, but also a code that will show the document, the digital document.
Yeah, we could combine indeed the use of SWIFT with those digital negotiable instruments. For instance, when you have avalization of bills of exchange, the seller's bank has to deliver has to exchange files with the buyer's bank and potentially transferring ownership indeed of the bills, and different messages and files need to be transferred, but the digital bill is a file. when the banks need to exchange that file in the bank-to-bank space, I think the SWIFT File Act is highly appropriate because the SWIFT File Act offers a secure bank-to-bank file transfer open to any format. So the ENIGO file, which applies encryption technologies to secure the file and to make sure it is MLETR compliant, so it is the original, and there is only one like this one, and it is exclusively owned by its owner, can be actually exchanged via SWIFT File Act, and we could imagine having a FIN message to confirm whatever the banks want to confirm, to add a level of comfort if the bank wants to reconfirm something over a SWIFT message. So we are really focusing with the D&I initiative on adding the incremental technology required to make MLETR achievable. All the existing systems, back office, channels like SWIFT or portals the banks operate are critical into the delivery of the value proposition to their end customers, could be large corporates or mid-caps or SMEs. So that's the trick, I think, to succeed in the fintech space in trade finance, is not changing what works. We're just adding what the market needs. And I would compare what we're doing here with the D&I initiative to what we all have witnessed with electronic signatures 15 years ago. With electronic signatures, business didn't change. The step to print, sign, wet ink, scan, and resend was replaced with a few clicks on screen. And those who wanted to offer electronic signature to their clients just embedded a provider. There are many providers. I always think about DocuSign as one, and there's no reason why I mentioned this one. It's because it's very well known, but there are others that are equally important in the market. But it's an example to showing how easy it is to achieve more by adding a piece of technology. And for MLETR and negotiable instruments, the electronic signature is key, but not sufficient. We need a piece of technology to demonstrate the exclusive ownership of the original, to track the original on a public ledger. And that is what ENIGO is focusing on. And this is why we have worked with vendors to integrate that piece of technology into their processes. And at the end of the day, everyone should win from such policy change in the market, technology innovation. The goal is everyone should win. And the bill of exchange and prom notes, in particular, those two, should grow in volume. And that should help lenders modernize also their supply chain finance capabilities. So if anyone here is focusing on supply chain finance, that's really where we are targeting to make the bill of exchange and the prom note relevant for expanding supply chain finance on the basis of these new legal standards based on the English common law. And those are discussions we are having with UK banks, European banks, and Middle Eastern banks. I'm here in Dubai, having spent some days at GTR MENA to discuss that with a lot of the large stakeholders here.
Yeah, excellent. And another thing is obviously the security aspects by using certain initiatives, and we talked about DLT, right? And the recent happenings, news of some people that were trying to innovate as well. So blockchain, DLT. I like you to share. What are your thoughts on that technology and how it applies, and if it's needed, not needed? Some people, say, okay, we have to invest in blockchain, and then share some examples of what's been happening recently.
Yeah, that's a topic very timely, because indeed we have heard the news yesterday about Marco Polo. We had the news about WeTrade a few months ago, and there might be more news coming in the future. I don't think we are at the end of this story. Now, my view, first of all, a personal story. When I was at SWIFT in 2015, that was my last year, because I left in December 2015. I thought, what is this blockchain buzz? What is this? I can't get it. I don't believe in it. I don't think a large database will suddenly move on a new piece of technology. I couldn't believe it. Of course, coming from SWIFT, where everything is centralized, governance is centralized, systems are centralized and replicated, of course, for disaster recovery contingency. I had a hard time to understand the whole distributed stuff and the need for new technologies for high performance data management. So it took me 4 or 5 years, but thanks to specific use cases, I got convinced. And we are implementing, indeed, as part of D&I initiative, we are implementing DLT for tracking electronic originals on a chain, which is proprietary. You could have different chains, of course, but that's the first differentiator of blockchain, is the public ledger that you can create. And of course, public, and you say public and banks walk away, say, I can't publish anything. And I think we have a whole mindset change to help a transition in mindset to help the banks go through, because actually the key value of blockchain and very easy to achieve, and that's what we achieve with the D&I initiative, is to use the public chain of any player. The commercial things doesn't matter. It's all the concept that matters. A public chain to track electronic originals. There's no need for regulatory approval to do that. And of course, on the chain, you would not write any business data. The chain is publicly accessible. I can send you the link so you can share with participants afterwards. The chain of the D&I initiative is public, but it only contains encrypted data. So that data is useless if you look at it with your eyes. Mm-hmm. However, if you receive an electronic original representing a prom note or bill of lading, you can encrypt that file and we call it hashing, and compare the hash with the chain to check if the version you got from that document is still the valid one, because maybe 30 seconds ago, a new version was created by the owner, and the one you got, the copy you got, is not valid anymore. So that's the value of the public DLT. It acts as a registry for validation. It has to be public because we don't want the whole market to sign up to a platform. Signing up to a platform is a 20th century's mindset. Platforms are critical, but they should not force the whole market to join them. This is too opportunistic. It worked in the 20th centuries, like SWIFT, like MasterCard, like Visa, like Euroclear, because they were the only way to achieve scalability was to sign up to the platform. And now we have new technologies with DLT, which enables platforms to be more interoperable, and the public DLT makes the difference. So I think the bank consortia that failed, the issue they had was they applied 21st century technology like DLT, but they applied it with a 20th century mindset, which is closed communities. And if you want to build a closed community, that certainly may be relevant. Platforms have very much value, but you can use a cloud like Azure, Google, or Amazon to create a platform. You don't need a permissioned like a closed DLT to achieve this.
Yeah. So obviously, people are thinking of revenue opportunities for their own benefits. So there's always, the desire to have some sort of closed platform. But I agree. So I used to talk about DLT before the pandemic, and everybody would look at me crazy. And now they realize the importance, particularly when it comes to security. So that's the key. It's not only enclosed, but also I can give an example of a client of mine in Latin America that the CFO for the Americas division of this Latin America company was inputting data into a system, and the other side something else would come out, right, when they downloaded it in the headquarters or whatever, right, and the company went under. And when I mentioned to him about DLT, he said this would have been a perfect solution to ensure that everything that was going through the system was clear, everybody had visibility, and it couldn't be modified, right? So when it comes to these things, it's important. Talk to me a little. Go ahead.
The final thing I want to, and I will write a blog about this because it's with all those news and the LinkedIn posts I've seen, and I'm part of WhatsApps on trade finance, and I see some confusion about it. So for me, public DLT is a new way to track originals, could be negotiable instruments or other types of originals. It has to be public because DLT has to become an open banking standard. You know, banks are scared about public DLT because they think everything has to be private. But if you look at the APIs banks have to offer to their clients, those are public as well. But access to the data behind the API is highly secured. So public DLT is an open banking standard, and tracking the assets we finance, the documents we rely on the public DLT enables us to prevent some level of fraud, because you can check on a continuous basis through API access to the public DLT whether that document that you're financing or that transaction you're financing or the document you're relying on is still valid, or has it changed in the meantime. So so I would want to position going forward public DLT as an open banking standard, and tracking is a key use case. We have seen it with correspondent banking payments going through GPI. It's done on a proprietary Swift basis, and of course that's how they should do it because they have a closed community. But for new use cases like SME financing, we can't expect SMEs to join platforms, to pay platforms. The SME should only be working with their lender, the bank or the non-bank lender, and all the technologies behind it should be as open as possible. Yeah.
Well, it's funny you mentioned. So I worked in a merchant services company, and the biggest fraud happened on the credit card portals, right? The systems that they use, because there was some cabling that will capture the data. Now through blockchain, they ensure that the machine and security information can only be opened by the parties that have access to that information, no longer accessible through the cable. So it's if you guys, we should do probably a more in-depth seminar on how blockchain works and the applicability for trade and how it's been working for other industries like merchant services and payments. So, and e-invoicing, which is also, a lot of people are applying those. Excellent. So we talked about digitization, and we see the great work that's being done, through the initiatives of the committee and with the members of ITFA. Talk to us about, the core of how we started. We started many years ago with forfeiters, right? And the transferring of trade drafts, no electronic, right? You send the actual draft all over the world, and then endorse it and back and forth. And then we use that to finance. And then the people that accumulate a few of these, then they sell it in the secondary market. And then now we add the fact that we do, participations of Swift on Swift messages for third parties, funded or unfunded, right? So how is this playing out now with the TFD? So what's the changing proposition with this initiative?
So TFD initiative aims at basically growing the distribution market. And the way to grow the distribution market is to attract additional institutional investors, capital markets investors that recognize that the trade asset class is attractive from a risk-reward perspective. And in order to make this more attractive, it has to be more accessible. So banks have to transform their portfolios of receivables, payables into notes for institutional investors. Of course, we have heard about major securitization programs since a decade or so from the top banks, but that has always been done on a one-per-one bank basis, and only the top banks. And it requires a high set of fees. So on the legal side, and to have set up an SPV, the program, the legal documentation, and so on. What we're doing with TFD initiative is to democratize this whole process. We're making securitization as a service accessible to any originator, not to corporates, to originators. Could be banks, could be factoring companies, could be supply chain finance platforms, could be other technologies focusing on origination and that want to provide a link to the distribution and securitization. And of course, the value of securitization as a service and automated distribution is maximized. The value of this is relevant when you have high volumes of receivables and payables. Because when you have high volumes on a daily basis of invoices to securitize into notes and SPVs to replenish as capital and invoices come to due date and capital becomes available, replenishment has to be automated as well as reconciliation. So digitization for me is only a first step. The value of the digitization in the distribution space comes from the ability to automate high volume flows. And this is definitely very relevant on the corporate risk side, confirmed payables, unconfirmed receivables that originators fund and that they want to distribute to release capacity on their balance sheet. So what's in it for institutional investors? Trade becomes more easily accessible across a community of originators. What's in it for originators? They can release capacity on their balance sheet so that they can originate more as they move to the originate and distribute model. It's easier said than done. So we started this development with trade tech, so trade tech with a Q at the end, in 2018, and we set up the TFD initiative in early 2019, and now we have a set of originators, and it can be large banks like Santander, or smaller platforms like Accelerated Payments, working with niche asset managers or large asset managers. Big names we're working with are Goldman Sachs Asset Management, which has acquired the Dutch NNIP. They have trade funds with a strong ESG focus. Could be Allianz Global Investors, Aegon Asset Management, which is smaller, or Legal & General, a pension fund that has a trade fund as well. So it's automated distribution out of the box for those originators who want more automation, and that includes the large banks of this world, and for smaller originators who can't afford to build their own distribution infrastructure, given the lower volumes they originate. Yeah.
I mean, obviously, so when I ran the distribution for BofA the Americas, it's a lot of work, right? It's a lot of work signing the agreements with all the individual counterparties, making sure that there's credit available to some of them if they're doing unfunded participations. You have to have the relationship and trust, and it's just a lot of work. So this basically, what does it do? Does it showcase for anybody that signs up to these platform or initiative? It allows them to showcase their portfolio and have investors look at it, or how's that process? Because obviously, same thing. Yep. People are a little scared of who's looking at it. Maybe we shouldn't. Not everybody should be looking at it.
So definitely the TFD initiative aims to get originators and investors to meet. We're going to organize a member meeting in October, November. We are going to announce this quite soon because it's all about facilitating deals. So we're going to have an event about this, but on the technology platform developed by TradeTech, which is the core technology provider of the DNI initiative, of the TFD initiative, we are basically offering the originators and the investors a full set the most comprehensive, I can say, because I know the other some of the other platforms in that space, the most comprehensive set of distribution capabilities. It could be bank-to-bank MRPA, it could be credit insurance with or without broker, it could be repackaging, which is a top value proposition, because that's where the complexity lies into automating repackaging, reconciliation, and replenishment. But as you rightly point out, it could also be publishing your assets you want to sell. Publishing to a limited extent, of course, because when you're executing deals, you know exactly who you're working with. It's a bilateral agreement that has been put in place, and then the technology makes it happen. But when you are looking for new relationships, you have to offer some data, not the full details, of course, because you don't know exactly who will look at it, because you want to find new people you don't know yet. So to establish new relationship, TradeTech also operates a marketplace where you can indeed push the information that is the minimum for investors to get interested, and then to basically establish a new relationship. But distribution is indeed, the distribution space has been growing in the bank-to-bank, but we now see also, because of Basel IV pressure on risk-weighted assets, we see large banks as well as smaller players wishing to distribute on a funded basis. They keep the credit insurance angle, of course, for the risk, but they want the liquidity, because the liquidity helps them to further decrease the risk-weighted assets. And it's again a matter of releasing capacity on their balance sheet. And it could be for regulatory reasons, could be for limit reasons. It could be to enhance the what's the name again? The velocity. I was looking for the word. Velocity of the balance sheet, to put the balance sheet to work more, so that originators can grow their origination. Because as soon as you distribute, you release capacity, you can originate more, and you can charge more service fees, basically.
Yeah, and so this is critical for supply chain, for example. When you're when you look at it in large volumes, 4 or 5 days in acceleration of the cash flow can mean millions of dollars in savings and fees, and that they don't have to pay, etc. So makes sense.
Yeah, and those institutional investors, they don't want to take the credit risk in many cases. So they really complement what the credit insurance market, which is a highly mature market, is already offering to the banks. So there's no competition between the two. Each player has a particular role on the transaction. The originator, of course, originates. The credit insurer takes the risk exposure, and the institutional investor comes and extends the liquidity to the originator. How did we get there? Is because of internal limits, shrinking balance sheets, and growing risk-weighted assets regulation. So this is the reason why the market is changing, and new players are welcome into this market to help the small and larger banks. We are really implementing this with top 5 banks at this stage.
Okay. Okay, so let's talk a little bit about trends that we're looking at. So you touch on insurance. So obviously insurance, they're creating many platforms to digitize all these processes, and that's that heavy documentary evaluation to make sure that everybody conforms to the legal requirements in each country. Talk to me about what you're seeing. So obviously we are as an organization going to the UK regulators, and that was the last news that we received, and going to the different regulators to change things around, right? To make sure that trade not only traditional trade but also trade finance is easier around the globe. Tell me, what else are we working on or looking at? And also talk to me about the famous GPT like activity with AI that is happening around our world of trade finance. Just to mention a name, of what's happening in the news.
Sure. So I think where ITFA can play a role in all those new topics is to align, to help the industry align or influence the regulators to make sure the regulation is helping the market and not having unintended consequences. The industry has worked a lot, including with BAFT and ICC on the Basel III, Basel IV regulation, which has impacted the balance sheet management. At ITFA, the insurance committee headed by Celia Kalak of Santander CIB has worked with the whole insurance committee to influence the European regulators on credit insurance and the benefit of credit insurance, because the regulators do not always have the expert knowledge to indeed fine-tune those regulations in the right way. So that's where working groups, committees within ITFA help get together, work with others, work with BAFT, work with ICC, FCI, and so on, to make sure we are getting a unique voice to those regulators. So on credit insurance, that has been done in Europe quite successfully. I'm not an expert in that field because I was not involved, but it shows the top value that ITFA can offer to the community, because we can't have only one bank going to the regulator and talk about it. We need to get together, and that has been very successfully done on the insurance side by the ITFA Insurance Committee. We are doing the same on the FinTech Committee from a electronic documents perspective, like the MLETR I talk about, that's the DNI initiative. And we are also starting to do that also here in the UAE with the banks when it comes to tokenization, which is what we're doing on the TFD initiative. On the TFD initiative, we are also starting to use DLT to create investment products on the DLT for retail investors to fund the trade asset class. We released the first product last year under European
the DLT we didn't clarify, so it's the blockchain technology. So distributed ledger technology, just for the people that are not that technical.
Yes, for the distributed ledger technology runs one of our partners, XDC Network, member of ITFA, is focusing on trade finance, and Trade Tech has worked with XDC Network to release the first multi-originator token, regulated token, as a security token offering. The Liechtenstein regulation, which is, of course, a European regulation, applies in this case. Why? Because the regulators were very advanced in their mindset. But here in Dubai as well, as I'm spending the week here, the Virtual Asset Regulatory Authority is also working on this, and the UK also working on this. And the SEC is very active, as we know, on digital assets. It's a whole industry for some cities, some countries, and they want to become the Silicon Valley or the next Silicon Valley of digital assets. So that's where we need to work very closely with regulators, not only on credit insurance, MLETR for negotiable instruments, but also on digital asset policy to make sure that the new ways of working to make basically trade finance more liquid are aligned with the policy. Because of course, anything we do on that side creates an investment product. And of course, regulation is key when you issue an investment product, whether it's in the current way, notes or funds, or in the new way, tokens. So those are examples.
So let me clarify on the token side. So it's important that people know with tokenization, it allows for people that are non-traditional investors to be able to participate in this market at a smaller scale as well. So not everybody, if you're selling a $1 million trade draft or no, not everybody might have, not all the investors might have $1 million, but they might have, $50 to invest. And tokenizing allows for the mass market to participate in these type of transactions. It's interesting. It's a concept that it's hard to grasp on trade finance, how that will work, but be sure that people are interested in the asset class, no? And that's why people want to invest individually through these mechanisms. So
yeah, I mean, tokenization will offer new asset classes to retail investors, and retail investors we're talking about indeed hundreds of millions, potentially billions for some, like for some products, but some asset classes are only accessible to institutional investors because the entry costs are so high, because the manual processes are still so high, because intermediaries are still charging for services that are unavoidable. But on the chain, this changes a lot. Lower costs, less intermediaries, faster settlement, and new investment products are being created. Here in Dubai, I have met with Contech Gold, which is working with the regulators to tokenize gold. So you can go on a website, buy tokens, regulated tokens that offer you exposure on gold, but you don't need to buy. You don't need to buy, of course, a large quantity, and basically the entry costs are much lower compared to the current practices to buy gold. So trade finance through the TFD initiative has been tokenized last year. We have launched the TRADA token in Europe to enable indeed retail investors to invest in the asset class. We are working on additional developments because we can make it even easier and cheaper to access the trade asset class. And we are basically creating a primary token issuance market specifically for trade finance and looking at building the secondary market for the same. We're going to see a lot of innovations in that market. We're not the only one through the TFD initiative working on trade tokenization. We're going to see a lot of other opportunities. The difference with TFD initiative that we are multi-originator. We are not just working on a token for this particular country or this particular originator. It's not a proprietary token, it's a multi-originator token. And it's quite exciting, and it involves the regulators. So Abu Dhabi very active, Dubai very active, UK very active, and also many developments in the US. But I think in the US there is still a need for clarification because the SEC is also preventing some indeed fraud in that space, and yeah, policy work is ongoing, I would say.
Yeah,
but it's ongoing all over the place.
No, it's all. I mean, this is very exciting. All these opportunities for retail investors that are trying to help as well, and that have some understanding of global flows and try to help. How about ESG secondary market activities? Is that something that is of a buzzword, or is something that people are demanding or asking? These type of assets from the investor side?
I'm trying to beat Ricciardi's record.
1 second, please. Go ahead. Sorry, Andre.
So ESG, yes, that's a fascinating space. And are also starting to look at this seriously for automated and embedded transaction carbon offsetting. How to make this whole process of carbon offsetting traceable. The blockchain is used. How to embed it into existing processes, because otherwise, if it's not automated, embedded, it is too costly to implement. And how to indeed avoid fraud, so that because today indeed that may be an issue in some cases, that there is a lack of certification, traceability, to make sure assets are not double financed or triple financed. So I'm starting to indeed be active in that space as well, to embed ESG carbon offsetting at a transaction level, in payments, in trade finance, financial transactions overall. Very interesting space. Why? Because it didn't exist. A few years ago, it is nascent. Of course, like the crypto market, cryptocurrencies, it is subject to fraud because the rules and the technologies are not yet in place to combat fraud. There's a lack of visibility, lack of traceability, sometimes lack of regulation. So it's going to be interesting to see which of those platforms players are winning credibility, making it happen, working with major stakeholders. But that carbon offsetting is basically over time a business opportunity for many people to basically be part of the cash generation that is required for carbon offsetting and bringing the money to those who need it. And of course, some intermediaries in that process will be service providers being able to charge some fees for this. So I think the future is carbon offsetting as a business rather than carbon offsetting as a regulatory mandate and a cost burden for institutions. So that's what I'm starting to look at in addition to the D&I and TFD initiative, and looking forward indeed to tell you more about it, but also learn from the market as regulators are active and the innovations are also emerging on this topic. And indeed, as you say, it could become an asset class.
Yeah, I'm seeing some activity here in the U.S. around that, and we obviously we can discuss that at a later time. I'm mindful of the time. I wanted to see if anybody online, of course, raise your hand so I know who it is, and obviously if you can come on the video, that'd be nice as well if you can. Anybody that has any questions to Andre regarding some of these things that we mentioned.
Yeah, Hernan, I can ask a question. Andre, thanks a lot. That was super interesting. And I apologize if you covered this because I had to jump out for about 10 minutes. But the D&I initiative, I thought I heard you mention that it's covering receivables as well. I understand how it works with bill of exchange and prom notes, but what is the connection? What are you guys doing with receivables and receivables financing?
So basically, the idea is to help the supply chain finance market, whether you're a bank or a tech provider or corporate, to basically extend supply chain finance, which is today based on proprietary IPUs contracts and proprietary legal schemes for regenerating irrevocable payment undertakings, but actually the bill of exchange under English law, and then soon also on the US law, because the US law is also being worked on to enable this. How can we use at least the first one will be the UK in my view, how can we use the new digital electronic bill of exchange under English common law as a legal standard for generating IPUs as part of receivables financing or supply chain finance schemes? So because the bill of exchange is an irrevocable payment undertaking, which when it will be digital under common law, it brings the market a legal standard for the funder to have an independent undertaking to fund receivables or payables. So how can we help the market expand supply chain finance on the basis of this new legal scheme?
So you'd have the buyers would be signing up for supply chain finance to extend this to their suppliers, is what through the D&I initiative. That's what you're looking at, or are you looking at seller-led initiatives as well? Yeah,
today we are talking more about seller based initiatives where indeed but the two could be applicable. Here in the Middle East, they're using a lot of bills of exchange indeed from a seller perspective. You can have Microsoft, for instance, selling to distributors. They get the bill of exchange accepted by their distributor, and they finance receivables on the back of accepted bills of exchange. So that's the classic indeed method. But of course, as the bill of exchange becomes electronic under English common law, you could have many more bills of exchange, potentially one at invoice level if needed. And all of this could be done as part of the English common law. And for accounting treatment, it may help to have an industry standard rather than proprietary supply chain finance schemes. So that's really the goal. We could also have, if the large buyer schemes, if the large buyer accept to get engaged in bills of exchange, then of course the sellers could benefit as well. It's all about market dynamic, how the large buyers would see the bill of exchange compared to accepting a payment obligation under a supply chain finance scheme. But basically, so indeed today it's more seller centric, as we work here with banks in the Middle East. In, for instance, the UK, you may have seen Lloyd's having started prom notes on this technology under contract law, because the common law is not available. But we also worked with Mercor, which is an alternative lender, and Trade River. These are supply chain finance platforms at mid-cap SME level. And they want basically to standardize their proprietary, or to move from their proprietary supply chain finance schemes that require legal work and accounting checks and so on, to the English common law once available. So they have a legal standard to basically offer supply chain finance to mid-cap buyers.
Yeah.
But
let me add. I wanted to add something. So from the Americas perspective, obviously, since we're looking at the UCC regulation and all these things that apply, it's the concept of digital bills of exchange is still something that we have not understood as well, right? That we have to educate the public a lot more on the applicability and the transferability of these things, and that's the point, to make it accessible to a greater market outside of this the US, no?
Yeah, I mean, the link I make between supply chain finance and bills of exchange is the irrevocable payment undertaking. Supply chain finance aims to deliver irrevocable payment undertakings to the lenders under specific contracts. And all those contracts are basically proprietary and sometimes subject to accounting treatment issues or obstacles or questions. And now the market, on the policy side, we deliver the English common law with digital bills of exchange that aims to deliver IPUs outside of any contract and could be delivered by large corporates, mid-caps, or SMEs. And of course, it all depends on business dynamics, because some large corporates would say, I don't want to issue a bill of exchange. I prefer a proprietary IPU, fine. But basically, I want, and I've discussed that with platforms and banks, I want to position the English common law electronic bill of exchange as a new way for the market to generate IPUs. Yeah. So there's no competition for anyone. It's all about scaling supply chain finance, because at this stage it has scaled. It's a great innovation, but it has grown in isolation from a legal perspective, because each scheme is different, and it doesn't help to have proprietary schemes. It only helps the law firms to have more work, for sure, but the law firms will have a lot of work with the electronic bills of exchanges as well. So I don't think they will lose out there. We just want the market to benefit from more harmonized IPUs. And what I say about the English law will be the same concept with the US law or the New York law once it will be applicable at the international level, of course. So it's all about harmonizing IPUs at legal level. I'm open to this. Those are new concepts we are developing, and I'm sure there are here supply chain finance experts who could contribute or contradict. Very open to feedback.
Well, since you brought that up, let me mention that this is important, that what we offer an opportunity for members to be able to share ideas and initiatives that are ongoing, right? We're not only speaking at an event where this is happening on a day-to-day basis with the members of the committee, for these type of initiatives. And in the US, if anybody is interested in discussing any of these type of initiatives, so not only DNI and TFD, but also, you know, the applicability of it from our perspective in the US, and also, you know, new and emerging technologies like using AI and data lakes to be able to capture information to be able to fund new transactions or find ways to fund and find new business. All these things are technologies that are emerging, that are fascinating. Just to I've been playing around, of course, with ChatGPT a lot, and I realized the impact is just when you're just using AI to analyze large sets of trade data in a moment, right, and be able to make the connections that weren't there and available, are things that are going to grow our opportunities for us as members, right? And it's important that we share that information so that we create the ecosystems. And this is what Andre has been doing with the committee, creating ecosystems, you know, to allow for greater transparency, information, and also availability for new capital markets, new markets for our trade finance transactions. Andre, I know we're short of time. We can speak here for hours and hours. I appreciate you and everything that you do. And obviously we're fans here in the Americas trying to do more, you know, so we'll continue the conversations as time moves along. Maybe we have this on a quarterly basis or, you know, every 6 months to get a few updates. But where can they reach you if they have questions?
LinkedIn is a good place. Definitely chatting on LinkedIn or email. I can put my email here in the chat. I'm an independent consultant working with a number of fintechs. So this is I don't have a website, but this is my business email in the chat.
Excellent. And I'll share it with the participants here. I don't want to say it in public because this is being recorded, but I will share with the people that participated here today. Excellent. Well, again, welcome. I want to, before we end, and I wanted to just mention tomorrow's my birthday, so we're going to be celebrating, and then today and tomorrow. And today is Brendan Hurley's, who was a past president of ITFA in the Americas, birthday. So I wish him the best. And he'll be happy to hear this later on. But Andre, thank you. All the best to everybody in the FinTech Committee and at the board. And we're here to help. And we look forward to seeing you, everyone, on May 24th for our regional conference here in Miami. So I hope to see you all here. Okay. Thank you.
Thank you, Hanan. Thank you, everyone.
Thank you.
Bye-bye.
Take care.